few mid-cap stocks are buzzing in trade and as a reaction to the Q1 results. In fact, first up, AU Small Finance Bank. Well, although we're not seeing too much of growth in terms of the profits, profits excluding the stake sale of ours is good. Also, the profits have been supported on account of treasury performance and also control operating expenses. The moratorium book is down now to 11% by value. NPA is fairly stable, and of course the provisions have risen on account of the COVID. PNB Housing Finance managed to give better than expected results. The stock is again up in trade. They have managed to maintain margins in 2.66%. Moratorium book has reduced to 39% in June versus 56% in the earlier phase. Retail book moratorium is down to 29% from 49%. GNPAs fairly stable. They're up just around 1.2% quarter on quarter. We're also seeing that the disbursements, of course, on expected lines are significantly down 75% quarter on quarter. Management mentioned to ET now that they would be exploring options in terms of either a QIP or a rights issue or a preferential allotment, and if at all PNB, which is the Punjab National Bank, decides, then they would also be participating in the rights issue, but the decision from PNB Bank is still awaited. Repco Home Finance also managed a good performance. The stock was up, the spreads improved to 3.5%, the moratorium book declined to 32%. Profits, of course, have been under pressure, down 7%. However, they have managed with stable GNPAs at 4.3%. Provisions have risen, and the loan growth, of course, has been impacted. Bank of Maharashtra managed a very good quarter within the smaller PSU banks. In fact, the profits are up significantly at 24%. NPAs are down to 10.9% versus a 12.8% in the previous quarter. Slippages have reduced to 105 crore. Provision cover, in fact, has risen to 85%. And we're also seeing that the customers, in terms of the moratorium, that has come down to 24%. Deposit book accretion has been slightly decent, just around 10% YOY. Mphasis also managed a good numbers. The stock was up in trade. Revenue declined 4.6% quarter on quarter in constant currency terms. More or less this was expected. Profit is down nearly around 22% quarter on quarter. We're also seeing that the EBIT margin is down 60 odd bips on account of the fall in utilization. In terms of the verticals, barring banking and capital markets, all the verticals did show a decline in terms of the revenue. Deal wins, however, have been good. The company announced new total contract value of deal wins at nearly around $259 million in direct international, and this is the highest ever TCV win in a quarter for Mphasis. Zensar also we're seeing good performance. Revenue dip is in line at a decline of 4.8% quarter on quarter in constant currency terms. Margins have been slightly better than expected, up 11% quarter on quarter. Total contract value of the deal wins have been healthy at $150 million versus nearly $110 million in the previous quarter. The beat in terms of the overall performance came in because of better performance in the high-tech vertical, while the manufacturing vertical revenue, of course, declined. ABB India as well as Biocon did report slightly okay kind of numbers. In terms of ABB India, we have of course seen the profits, revenue as well as the margins come under significant pressure. The stock was also down over 2% in trade. Order book has been flat with the order inflows down nearly around 40% to 1,200 odd crore. Biocon, this stock was also slightly under pressure in the morning. However, if you look at the profits are under pressure, down 28%. EBITDA margin has dipped to 26%. Revenue from the generics business is up nearly around 16%, and revenue from the biosimilars business is up nearly around 19 odd percent. If you look at the contribution of the generics, that contributes nearly 36% of the sales, and biosimilars contribute nearly 41% of the sales, and the growth was dragged down by research services.